The short position, again, with silver, we're back at the greatest short position in history. With gold, there's a fairly dramatic increase here in their short position, so they are betting that they're both going to take a tumble, and silver's tumble is going to be far greater than gold's, creating opportunity for the people that buy at the right times. Hi, this is Mike Maloney with the latest Insiders Report. And before we get into the commitment of traders and some technical analysis, I want to show you a really cool tool that you can use. If you go to my own website, goldsilver.com, and you scroll down, you'll see that there is a gold chart and a silver chart here. And this is the day's trading. Right now, this is very late on Saturday, and there is no trading going on, so it's just a flat line. But what I want to show you is that if you click on these charts, you just click on that, it'll take a second to load. But here we have some more in-depth analysis on, you've got the gold-silver ratio, some historic prices, and then this chart on the top that shows you the complete 24-hour day of trading. And so this starts in Sydney, Australia, then Hong Kong, then the Zurich, Switzerland, London trading, New York trading, and when New York isn't trading, there's New York Globex. And the cool thing about this chart is that this is one day. This is Friday, because today is Saturday. The markets are closed. I'm going to turn Friday off, but you can see that there's always 5 days here. So I can go back to Monday, and this is Monday's trading. And then I can overlay Tuesday's trading on it. And Wednesday. Notice that the scale here goes from 1820 to 1850. Now watch that scale. I'm going to introduce Thursday, and Thursday we had a huge price drop in silver, and it readjusted that scale from 1775 to 1850. I'm going to now turn off Monday, Tuesday, and Wednesday so that we can just take a look at that enormous drop. And remember, I've been saying that there's probably going to be a pullback happening because of the short position that the commercials have in the Commitment of Traders report. So we had this huge drop in a very short period of time. And then I can turn on Friday, and you'll see that there's a little bit of a rebound on Friday. Now, this is not the bull market continuing, I don't believe. This is just the natural rebound that you have from very short-term traders, people that are in and out. When something gets oversold, they'll buy. I expect this to drop some more. But what I want to point out here is that the Commitment of Traders report comes out at the end of the trading day on Thursday. And so when they report this, they're reporting, the Commitment of Traders is reporting after this enormous price drop on Thursday. So now we'll get to the Commitment of Traders. And what we see here on the gold report, we see that there was a little pullback on gold, and that they, instead of covering some of their shorts, they increased their short position pretty dramatically here. So this suggests to me that this pullback is nothing but the beginning of a much bigger pullback that I've been anticipating. I expect at least a double bottom with this pullback back here in late December of last year, that bottom. Then if we go to silver, what you see now is it dropped and they increased their short position yet again, and now they're back to even with the greatest short position in history. So they are really betting that gold and silver are going to fall, and silver is going to fall a lot more than gold, which means that the gold-silver ratio is going back up into the 80s. I think it may even hit 100 again. So it's been at 100 a couple times in the past century, and I think we might be going back up there again. So here's a close-up, a year and 6 months of gold, and what you see here, we had this rally that bounced from I don't have any Fibonacci's on here, but the rally went up and then peaked right at the 50% retracement level and bounced off of it like it was a brick wall, and then the 50-day moving average caught it, and it went back up, and the 200-day moving average acted like a brick wall, and it has bounced off of it. This is a close-up on gold, and you can see that it hit that 200-day moving average, and it's been going down. The hollow body candles here are up days, so it opened at the bottom of this candle here. During the day, it swung to these extremes, the little wicks on the candle there, and it closed at the top of the body. So this one here, it's a black candle, so it opened at the top of this body of the candle, and it swung up and down and up and closed, or something like that, and closed at the bottom of that solid body. So that's how you read these candles. This is an up candle, so it opened here, swung this full length during the day, and closed right there. And then you see these 2 days of fairly dramatic drops in the price of gold, but it hasn't even come down to the 50-day moving average yet. Now, if we take a look at silver, if you recall, I was saying, it'll probably poke its head a certain percentage above the 50-day moving average, which it did, but I also said that that doesn't mean that it's going to continue running. It will probably take a fall because of that short position, and it did take that a pretty big plunge. And it hasn't come down to the 50-day moving average yet. Here's a close-up of it. This is a 3-month chart. And so we see Thursday's enormous drop, and then Friday it opened, it swung like this, and then closed right there. What this is suggesting to me is that this is just like a preview of the carnage yet to come, and the opportunity that it is going to create in the precious metals market, silver being the big opportunity when it finally puts in a bottom here. So that's about it for today. The short position, again, with silver, we're back at the greatest short position in history. With gold, there's a fairly dramatic increase here in their short position, so they are betting that they're both going to take a tumble, and silver's tumble is going to be far greater than gold's, creating opportunity for the people that buy at the right times. Thank you very much for listening, and we'll see you next time.